Cool. Well, good afternoon, everybody, and welcome to another webinar, which is probably presented by us here at Canals. We've been doing webinars essentially ever since COVID-19 hit or happened, or the restrictions occurred, just so that we can give our clients the most up-to-date information regarding a whole suite of things that's happening in the world. And in this particular webinar will be about JobKeeper 2.0. We've also got a couple of webinars coming up, and we're trying to do a webinar each month on a different topic. So in a couple of weeks' time, we have Graham Gross from Heron Top White, who's going to give us an update on the property market in central Queensland, which I'm very looking forward to that as well. Also, during the webinar, we're going to try and make it as interactive as we possibly can. So if you would like to ask a question during the webinar, please don't hesitate to yell out. Also, if you don't want to speak into the microphone or open your video up, I'm more than happy to put it in the chat box on the side, and I'll try and answer as quick as I can as well. Hopefully the webinar will only go for about half an hour, 45 minutes, but it can go for as long as we need it to go, so that everybody can get the information that they need to about JobKeeper 2.0. You hear me referring to it as 2.0. It sounds a bit computer-like, but that's just the name that everyone's given it, so I'm just going to run with it as well. But essentially, it's just an extension of the current JobKeeper program that most of you, or a lot of you, would be on already from there. There's quite a few changes with regards to the JobKeeper 2.0 program, and we'll try and run through that as best as we can. What I'll do now, I'll just share my PowerPoint screen. Hopefully it comes up okay. Sam, can you see my PowerPoint there? Is that right? Yep.
Yes, I can.
Okay, cool. Thank you. So, JobKeeper 2.0. So we already have JobKeeper in place, and the current JobKeeper program is due to be kept running in place until the 28th of September. So the 28th of September is when your final fortnight for JobKeeper, the current JobKeeper program finishes, and the payment for that is usually done by a claim made in October. So essentially, for any pays that happen up until the 28th of September, if you're already enrolled in the JobKeeper program, you're able to make that claim in the month of October for the September month. And what's happened for the ATO and the government, they've then extended that program for a further 6 months, but with some pretty big modifications to what it was originally. And that's essentially why we decided to have the webinar, so that everybody was able to get the most information and make a decision as to whether or not they'll be eligible for the second round of JobKeeper and how they can essentially go about doing it. Now, if after all of the requirements and eligibility is met, and you are determined to be eligible for JobKeeper 2.0, what you do is actually nothing different to what you currently do. You'll just continue to claim JobKeeper via the Australian Business Register portal, or the Australian Business Portal, and you'll have to continually make sure that your employees are paid the minimum amount of the payment, which we'll go through in a minute. You'll be required to reassess your eligibility to keep claiming JobKeeper in the December quarter. So that's from the months of October, November and December. Once you're in for 1 month, you're in it for the whole 3. So it's essentially like what it was for the original JobKeeper program, where if you're in it once, you're in it for the full 6 months. Once you determine your eligibility to be eligible for the December quarter, you're eligible for the whole 3 months in the December quarter. Bit of a change though, in that for the December quarter, the amount paid to full-time employees per fortnight has been decreased to $1,200, and also decreased for part-time employees to $750. Now I'll go through in a minute what a full-time employee and what a part-time employee is, and how to determine who's eligible for which one. But you're also legally required to pay these at a minimum before tax, whilst also being able to top up the payment with additional wages earned. Okay, so the minimum amount that you have to pay for this per employee is $1,200 per fortnight, not $1,500 like what it was for full times, but it also goes back to $750 per fortnight for part-time employees. That's very important to recognise that. So If a part-time employee who was on JobKeeper before was getting $1,500 a fortnight, that's been reduced down to $750 per fortnight. I've got a great example, and I was actually there, so this is a pretty cool story. When one of my clients who runs a coffee shop called in 4 of their employees, and I happened to sit there and answer their questions, where we told them with JobKeeper, the original JobKeeper, that instead of earning $400 a fortnight, they were now earning $1,500 a fortnight. So as you can imagine, there was a lot of those stories around the country where people who were working part-time or working systematically casually and only earning a certain amount per fortnight were being topped up to higher amounts than what they would have otherwise been paid. We're getting pay rises. So the government's recognised that, and they've therefore scaled back the amount for part-time employees to $750 per fortnight. So it's very important to remember, if you do have part-time employees, is that we need to notify them from a payroll perspective that after the 28th of September, they may be decreasing back to a certain amount. It doesn't mean that you have to pay them $750. You can pay them more if they work more, but the minimum they must be paid must be $750 per fortnight. To be eligible for JobKeeper 2.0, there is a few bits of criteria. The first one is that you must currently be enrolled in the current JobKeeper program. So straight away, if you're not in JobKeeper 1, not eligible for JobKeeper 2. But that's on the basis essentially that your turnover should be down by 30% or more in the September quarter, and therefore you would have to register for JobKeeper 1 in any case, okay? So essentially, you must be currently enrolled in JobKeeper program. If you're not currently enrolled, but you think you're going to be down 30% for the September quarter, I suggest you enroll straight away. Now, previously with JobKeeper, the original JobKeeper program, it was based on projections and based on a month-by-month turnover amount. So for example, with JobKeeper 1, it was based on that March turnover versus the previous month, or the April turnover versus the previous month of the previous year. That's slightly different to what the government's come up with in JobKeeper 2.0, where it is your actual turnover for the September quarter has decreased by greater than 30% compared to your turnover in the September quarter of 2019. We can no longer project this out. This is actual versus actual. So it's very important to understand what your GST turnover was, and I'll go through what your GST turnover is in the slides following, in 2019, and then calculate what your GST turnover for the September quarter of 2020 will be. And if it's going to be actually less than 30%, then you will be eligible for JobKeeper 2.0. So it's one basic calculation. We still claim based on the number of eligible employees, and we can still claim an eligible business participant if an owner is not receiving a wage. So that doesn't change. But the current JobKeeper runs until the 28th of September. So if you've always claimed for JobKeeper 1.0, if you want to call it that, if you've always claimed JobKeeper, you keep claiming it for the months of August. If you haven't done your August declaration, you need to do that by the 14th. And for September, you can still claim September, and that can be claimed in the month of October. So it's very important to realize this set of rules is purely from October onwards, but it takes into account your September quarter turnover versus your September quarter from the previous year. So I'll just dig a little bit deeper into that, and we'll just go over the GST turnover requirements. So a decrease in GST turnover by greater than 30% for the September quarter in comparison to previous year's September and quarter in order to claim JobKeeper until the 3rd of January. There's also a second lot of JobKeeper which goes through until the end of March. And what happens with that one is that you need to also be eligible for a further actual turnover test, being that the December turnover is less than 30% of the previous year's December turnover. Okay, so to get JobKeeper from the months of January, February, and March next year, both your September quarter and your December quarter turnover has to be greater than 30% decrease compared to the previous year. So it's a pretty strict test, and we're finding that a lot of clients won't be able to meet this, but there's still going to be quite a few that are, depending on the industry that you're in and your current business circumstances. So it is quite important to make sure that this calculation is done for all businesses to see if you are eligible for, at first, October, November, December, in the second instance from January, February, and March. I'll go through what GST turnover is in a minute, but it's important to note when you are making this calculation to make sure you exclude your JobKeeper claims for the months of July, August, and September, cash flow boost, and other government grants. That does not form a part of your GST turnover. I've also got a couple of clients who weren't trading in the previous year, or whose previous year's turnover isn't quite reflective of their current business. There are alternative tests available where no comparison period applies, or there's been a substantial change in the business. Okay, so if you don't have a relevant comparison period, you are able to compare previous quarters. So for example, the September quarter to the June quarter or to the March quarter, etc., etc. There are turnover tests that do apply in those instances. But for the majority of our clients, basically September quarter turnover, has it decreased by more than 30% compared to the September quarter turnover in 2019. So what is GST turnover? Well, GST turnover includes all supplies that you make as part of your business, except for the following. Now, supplies are essentially sales. Sales or any supply that you've made as part of your ordinary operations, being goods and services predominantly. There's also other things that you might do. You might sell a piece of equipment. You might receive income from rent or something like that. But supplies that are explicitly excluded in the calculation of the actual GST turnover are those that are input taxed. So that is essentially rent or residential rent or bank interest, that's input taxed. Supplies that are for no consideration. So if you were to gift something to somebody else, that doesn't count in your GST turnover. Supplies that are not made in the course of your enterprise. So if you do something randomly different that aren't part of your enterprise but still attract GST. Anything that's exported, so supplies that are not connected with Australia, aren't counted in your GST turnover. And supplies that are made when an enterprise is ceased or is substantially or permanently reduced in size or scale doesn't count towards your GST turnover either. The other thing to be careful with that is also, as I said before, is your JobKeeper claims. So if you're running a profit and loss out of Xero or MYOB, and in the income section, you have JobKeeper claim or COVID-19 cash boost, make sure you take those amounts out when you're calculating your income for the September quarter versus your September quarter of the previous year. I can't stress that enough. I've had a couple of clients already ring me up and say, hey, I'm not going to be down 30%, but when we take that out, it actually gets quite close. So make sure we take out those monies we received from the government. Just got a couple of questions which I'll answer now. So if you don't qualify for September quarter, then you won't be able to claim for the March quarter, even if December quarter is down by 30%. That is my understanding. You need to have qualified for both September and December quarter to be able to claim JobKeeper from January, February, and March. That's correct. I also had a question here. Does that mean you don't have to include the small business adaptation grants and the grants from the Rockhampton Regional Council? That is correct. We do not include the grants or anything that doesn't have GST from a government grant or a subsidy as part of your GST turnover. Keep the questions coming, guys, because I'm sure everybody's got their own unique situation, unique question, I'd be happy to answer those ones. So that's the turnover requirements and what it actually is involved in being eligible to receive JobKeeper 2.0 from a business point of view. So if you meet those requirements, and there will be quite a few enterprises that do meet those requirements, then we have to drill down into the employees to work out A, if they're eligible, and B, how much do we receive from them and how much do we need to pay them as a minimum. Now, the eligible employee start date has changed to the 1st of July 2020. That was previously the 1st of March 2020. So what that does essentially is when JobKeeper 2.0, when the original JobKeeper started, it applied for all employees that were full-time and had been employed prior to the 1st of March 2020. The government has since moved that date to the 1st of July. So if you put anybody on full-time in that period between the 1st of March and the 1st of July, you're now able to claim them as part of a JobKeeper payment from the 3rd of August, okay? So it might be worthwhile if you have put on any staff in that period, just to double check to see if you are eligible to receive JobKeeper in that period of time. We have had quite a few clients that have put 1 or 2 people on and have been able to claim for the months of August and September from there. As far as casuals are concerned, this also does change the casual start date back to the 1st of July 2019 rather than the 1st of March 2019. And they are eligible provided they were employed on a regular and systematic basis throughout that period of time. So we also had some clients originally who couldn't claim for their casuals that were employed, for example, on the 1st of June 19, but they're able to come back now and employ them from the 1st of July 19, or sorry, claim them from the 1st of July 2019. Another change that snuck through basically as a result of some fast food employees who were 15 and 16 years old getting $1,500 a fortnight. You must also be over the age of 18 years as at the 1st of July 2020 to be able to claim for JobKeeper. Unless you are 16 or 17, you are independent and not undertaking full-time study. Now, those people have to make a declaration on their forms so that they notify the employer, and it is essentially the employee's responsibility to declare that they are independent and not undertaking full-time study. I think that's a great approach where it's putting the onus back on the employee to tell the employer rather than the employer having to decide whether or not a 16 or 17-year-old is independent and not undertaking full-time study. Flick through, but if you've got any other questions, please just yell out in the chat box and we can go through them as we come through. Payment rates. Excuse me. From the 28th of September to the 3rd of January 2021, full-time employees and full-time eligible business participants will receive $1,200 per fortnight. That's down from $1,500. And part-time employees and all other eligible business participants will receive $750 per fortnight. Now, an eligible business participant is somebody who works in the business, is actively involved in the business, but does not receive any wage for it. So usually they're directors or wives of husbands or etc. from there. But they would have already been registered as a business participant in JobKeeper 1, and they really are classifying them based on the number of hours that they work for JobKeeper 2.0. So whether you work 20 hours or more, you'll be on the full-time rate. 20 hours, less than 20 hours, you're on the part-time rate. From the 4th of January to the 28th of March 2021, which is JobKeeper 2.0 Part 2, if you want to call it that, full-time employees and eligible business participants go down to $1,000 per fortnight, and part-time employees and other eligible business participants go down to $650 per fortnight. So you can see what the government's doing. They're sort of weaning these businesses off JobKeeper and reducing the amount of money that the employees get from there. And that's the amount that the employer receives from the government for each employee, and that is the minimum amount that you must pay your employees in those brackets as well. So similar to your current JobKeeper top-ups that you might already be doing. I had a question here. Is everything is saying full-time or part-time employees? Most of our employees are casual. What do they get paid? I'll get to that in a second, so that'll be fine. And can an employee switch between the 1,200 depending on hours worked each fortnight, or so they just stay in the same level of payment from start to the end? So I'll keep those questions in mind and I'll try and answer them directly in a second. So whether or not you're classified as a full-time or a part-time employee depends on work. If you're a full-time employee working in the business on an average of 20 hours per week, in the 4 pay periods, this is getting quite confusing, I know, but I'll try and simplify it. In the 4 pay periods before either the 1st of March 2020 or the 1st of July 2020, whichever is greater. That's how we determine whether or not an employee is paid at a full-time rate or a part-time rate, okay? If they're casual, it's irrelevant. Really is classified based on the full rate or the half rate. So if a casual is averaging 30 hours per week for the 4 pay periods before the 1st of July 2020, they will be paid on the full-time rate of $1,200. If a casual, for example, my stepson, I'll use him as an example, he works 10, 12 hours as a casual, he would be on the part-time rate because he would have averaged less than 20 hours in the 4 pay periods from there. Now, to work this out, you calculate the employee's average hours for both of these, and whichever gets you the higher answer is the one that you take. So another example could be that they could have worked an average of 30 hours prior to COVID, and they might only be working 10 hours a week average now. Well, they will be caught in the full-time employees because whichever is higher is the one prior to the 1st of March 2020. Is a pay period a fortnight? No, a pay period is essentially whichever is your ordinary pay cycle. So for some employees, a pay period could be 4 weeks. For some, it could be 8 weeks with a fortnight, or for some, it could be 4 months, as I know some employers pay monthly. But it is a pay period, is the way I've understood that. Whichever is greater. So what essentially they're trying to work out there is if you come from full-time back to casual or part-time or low hours during COVID, they will pay you at the higher rate. And the employer must obviously top up your wage to that rate as well. An employee can't switch between the two. Essentially, you apply this test, and then that's the test that they stick to for the full period of JobKeeper. Whether or not they're casual, part-time or full-time, the test is purely based on the number of hours that they work in these periods and how they're classified. Donna, I can see you there. Does that answer your question? Is that right? Kinda? Okay, so how it is, essentially, it doesn't matter whether they're on what basis you are. You need to go back to the pay periods, the 4 pay periods prior to the 1st of March and the 1st of July, average out their hours for those pay periods. If the answer comes to greater than 20 hours per week, they get paid the full rate. If the answer is less than 20 hours per week, they get paid the part rate. Now you got to do it for both March and July, and whichever answer gives you the highest is the one in which you need to apply them to. Cool, I can see you nodding, awesome. And as I said, the pay period thing is a bit, I guess it depends on how you pay. So if you pay weekly, it's really taken by 4 weeks. If you pay fortnightly, it's averaged out over 8 weeks. Anomaly, but that's what they've essentially said. The ATO does have discretion due to unusual circumstances in which you may wish to apply a different test. Now, the ones that I've been given are illness, maternity leave, and there was an example in the EM, which is bush firefighting, if they were off work and they were fighting fires or what have you, or if they were volunteering for an organisation, or if they're on jury duty. They are able to give some discretion, and you will need to, best way to do that is to obviously apply to the ATO to do that. That they could say, well, usually they're full-time, but in the 4 pay periods, they averaged under the 20 because of this reason. We will pay them at the higher rate. Business participant payments are claimed on the hours basis also. Most business participants would be working more than 20 hours a week in the business, but that might not always be the case. So just make sure you've got some documentation, or you're easily able to justify that as a business participant, you're working more than 20 hours per week in the business in either one of the periods which we've classified there. I hope that's as clear as I can possibly get it from that point of view. How it's claimed is essentially how you claim it at the moment. There's no additional forms that need to be completed by either the employer or the employee. It's just a matter as you will go into the business portal and you will keep claiming the JobKeeper payment as you're doing at the moment, okay? And how the ATO will be able to tell people to drop off is essentially if you just don't claim. So if you go to the first turnover test and you decide that, no, I'm not eligible, there's no stopping it or anything like that from what I'm understanding. It's essentially just don't claim anymore from there. What is important that you will have to do is notify those employees that you've been topping up that on the 28th of September, your JobKeeper payment top up will end and you're back to normal pay from that point of view. That is something that we are sort of gearing clients up for at the moment, especially those that have got quite a number of employees on top ups, or they're employing people up to the $1,500 to keep them busy, but they're going to be earning less from there. So as a business, you're really going to have to be careful with your wages bill now, because what you're getting in from JobKeeper subsidies is going to decrease, and how you deal with your wages expense in the back of that is something that's very important from there. I haven't put this on the slides, but I do note that there is still, and this is a Fair Work area, so the Fair Work have come out and said that even if your turnover is only 10% declined in the September quarter, you are still eligible for the Fair Work concessions under JobKeeper for December. So if you are looking at employees and Fair Work and things like that, the JobKeeper concessions for employers still applies if your turnover was 10% declined in that quarter. I'm not the biggest Fair Work expert. I'm the accountant that deals with this, but it is something to keep in the back of your mind. If you are having to look at standing people down or continued stand downs and things like that, go and get some HR advice and Fair Work advice based on your level of turnover decreasing, because even though you might not have 30% decline in turnover, if your turnover is declined 15 or 20%, you might find you might have to still decrease your wages in some manner. And that is something that's very real out there at the moment. Receipt of payments for the JobKeeper period. This pretty much is just a reminder of how the original JobKeeper works. Also with that, from there, the JobKeeper payments onwards will essentially happen the same. So the last JobKeeper payment is for October, which is $3,000 per employee. The September JobKeeper payment, if you haven't already received that, is $4,500 because there's 3 fortnights, and the fortnight ends on the 28th of September, and JobKeeper 2.0 starts from the 28th of September and runs through until the 3rd of January. So we've pretty much done the first tranche, and we're starting on the second tranche of JobKeeper now. That was my overview of what JobKeeper is and how its effect on employees are. But I'll open it up to the floor to everybody, even if it's in the chat box or via microphone. what are people seeing in the JobKeeper space? What's the concerns, and also what questions do you guys have as far as what JobKeeper 2.0 could mean to you or may not mean to everybody? No? Hopefully I've answered it pretty well. Gone through, clear as mud. Basically, the two things to think about to start with is go back to the start and go, am I eligible? September turnover versus September turnover. After that is, okay, I'm eligible. I'll keep claiming as I'm claiming. Then work out your employees based on their start dates. So remember, the new start date is the 1st of July, 2020. So anybody that's employed full-time prior to that is eligible for JobKeeper. Anyone that's been part-time for 12 months prior to the 1st of July 2020 is also eligible. And then work out whether or not you claim at the full rate or the part rate, which is the only real difference between the first JobKeeper and the second JobKeeper from there. And that's purely based on the average of 20 hours a week or more over 4 pay periods. But the slides will be available to everybody to run through that. And then it's a matter from a business point of view that if you aren't eligible from JobKeeper 2.0 is notifying your employees, that their wages may decrease back to what was normal pre-COVID. From a business point of view, we'll need to make sure we rework our sums on wages versus turnover, because we're going to be receiving a lot less money from the government as far as income's concerned. And that's something that a lot of employers are going to really have to think about the next 4 to 6 weeks as that October JobKeeper payment rolls off and there's no JobKeeper payment come through for November. Got Brent here. How are you, mate?
Good. Sorry, I was tied up with a client.
You're right. You're right. I think the chat box is all free, mate. Have you got anything else to add or any questions of me at all? Darren, is there anything?
Done well as per usual.
Is there anything I've missed, Darren? Please tell me.
No, mate, that was a great summary. So it's just one of those interesting times right now. Again, look, there are some businesses that have been lucky and their turnover has popped back up again. The issue for them will be they may not be down 30%, but they may be down 20 or 25%. So that means, as you've touched on, Pete, that there's some key decisions to make, I suppose, about the ongoing business and what might happen there. And unfortunately, some people may lose their jobs with this happening, and that's certainly the expectation of the federal government, I think. So it's one of those catch-22s. If you're lucky enough to still qualify, that can be a good thing to keep propping your business off. If you don't qualify, hopefully your revenue's popped up enough so that you're okay to survive. But you look, certainly make sure you have a chat to, Pete or myself or your Canar's accountant. If you've got any concerns at all about whether you still qualify or not, and look to do it pretty soon, just so you can make some informed decisions.
I've got a question here. What periods would you use for a business participant? Because business participants don't have pay periods. If you have employees, the suggestion is that you use the same pay period as what your employees would otherwise use. Now, if you don't have employees, there's a suggestion in the EM where you could work it out on either a fortnightly or weekly basis for the average of 20 hours per week. But the inference in the first point is go off what your employees are paid and then average it out from there.
I was just going to say, Peter, I'm pretty sure most business participants wish they were working less than 20 hours a week. It's probably more like 70 or 80.
Talk to Kelly, my partner. She'll probably tell you more than that.
Yeah, and I agree with that too, Peter. I'd love to work just 20 hours a week as a business participant rather than an employee.
Isn't it funny that we all, like, you read or hear about these great books as a business owner, work 5 hours a week and make trillions, and I don't think that's quite the case, is it really? When you go into business, you work very hard for what you get, that's for sure. I've got a question from Sarah as far as she's in Melbourne. Are there any additional things available to us? From a tax office point of view, there isn't at the moment. I'm not quite aware of any sort of Victorian government grants or anything like that. But the ATO essentially, and the federal government essentially is purely based around the JobKeeper payments from there. So whether or not they go off the December quarter turnover without September quarter is something for a later date. But at the moment, even if you're in Victoria, I've got a couple of Victorian clients as well that I know Sarah was looking at originally, and there's nothing different or especially there for Victorian at the moment. It's gone nationwide, these rules, from the tax office perspective. Anybody else with any comments or questions? How's business going for everybody else? As Darren said, it's going to be some tough decisions because if you're down 10 or 15 or 20%, sometimes profit margins aren't going to really carry the same amount of employees that happened before, is it, Darren? So that's probably a key thing that everyone needs to be aware of and be aware of it quickly. Cool. All right, Brent, can I throw it over to you? Is that all right or not?
Wrap up?
Yeah, yes, please.
Yep. No, thanks, Pete. You always deliver a great simplified overview of what's a very, I think, difficult thing to everyone to get their heads around. So good job, mate. And as we've got Graham Gross joining us in a fortnight to give us an update on the CQ property market. So that'll be interesting to sort of see where their thoughts are and what they're seeing around the CQ area and what their thoughts are maybe on JobKeeper and what impact that might have on properties and also commercial leases and tenancies and that sort of thing. So I'm very interested to hear about that. And we'll also send out the SurveyMonkey survey. I know people love doing surveys, but we're trying to bring more educational information and the more feedback you can give us about what you want to hear, that's what we'll tailor our webinars to. So thank you very much for joining us.
Yeah, thank you very much, everyone, for joining us. I hope you're all safe and well. And yeah, all the best for the business in the next few weeks leading up to Christmas, and hope everything goes well with JobKeeper. But if anybody has any questions at all, please don't hesitate to give us a yell, and we'll go through it with you. Sam, I've got your question here, and yes, I'll give you a call next week or two, so that'll be fine. No, thanks everyone for listening. I hope you all have a fantastic night. Enjoy the nice September weather, and we'll talk to you all again soon.
Thanks, Pete. Thanks, everybody.
Thanks, guys. Thank you.
Thank you.